Hello everyone, welcome back to the channel. André Cardoso sharing some patterns with you for the week ahead, tracking some of the patterns, tracking some of the fractal support and resistance levels in our charts. So I hope you had some time during the weekend to prepare your technical levels. Where do you think the market will offer you an opportunity to get involved and to try to make some money? For today, let's cover some of the Forex pairs, some of them with some patterns that I want to, to share with you. Let's start with the pound. Three drives pattern formation on the daily time frame chart. We have signs of bearish divergence, and that pattern, of course, will favor a pullback. The three drives pattern will target the point A, the first lows of the pattern, the bottom of the structure, and in this case for the pound it converges with the weekly fractal support 131.40, the 38% major Fibonacci retracement level, and also the 161.8% Fibonacci extension of the last swing high, the one that prints the daily fractal resistance above. So that's the default expectation. So we have a three drives pattern suggesting a pullback for the pound. If you go into a lower time frame chart, I shared this before last week, the shark pattern completed at 136.85. At some point I will expect a pullback or a retracement, and that converges also with the formation of a three drive. So we have multiple patterns favoring or suggesting a potential pullback for the Great British Pound, and I will not be surprised with that, specifically after this very strong rally to the upside last week. So I admit a potential pullback for the pound. We have also euro versus the dollar. I shared this pattern before on Twitter and also at Forex Analytix, of course. Bearish crab pattern completed at 117.45, implying a potential pullback or a retracement back to the 38% Fibonacci level, the default target for that pattern, which lies at 116.36 for the fiber. We have also the Aussie inside what we may call a descending wedge pattern formation. I admit more downside momentum for, or let's say a pullback or a correction for the Aussie, and very similar with the Kiwi, the New Zealand versus the dollar. So basically we are at this point, we are exactly at the midpoint of the measure of the range. Let's say the intraday support at 65.08, intraday resistance at 65.52. So we are basically at 65.28, right in the middle of that range. We need to wait for or the breakout above the resistance levels or the breakout below the support. If the price breaks below the support level, which is that's what I'm expecting, momentum to the downside, a corrective move to the downside, I will wait for the formation of a bullish alt-bat pattern projected at 64.69. That converges with the retracement back to the 50% Fibonacci retracement level for the Aussie. The Kiwi also, after printing a new higher high, we have a new fractal resistance at 60.85. A new fractal resistance. As you can see, this may act as a false break of the previous highs, the previous resistance level at 60.78. We have a new higher high, and this may work as a false break of resistance. Usually when the market prints you a false breakout of a resistance, and that will only be confirmed once the price breaks below the fractal support level, but once the price breaks the support at 60.37, that will confirm the false breakout of the resistance. Usually the price will search for the 161.8% Fibonacci extension of the last swing high. That will also complete what we may call later the bullish shark pattern for the Kiwi. If somehow the price approaches these levels and breaking the support level, pay attention to this 60.07, the golden Fibonacci extension of the last swing high, that will complete the bullish shark pattern, which will imply later, of course, a bounce after its formation. So that's the kiwi. Of course, I don't need to underline these. If the price breaks above the resistance levels, we may see a squeeze to the upside also for the kiwi. And also for the cable and the fiber. Of course, a breakout above the resistance will invalidate the potential or the higher probability of retracement.
Something exciting is happening at Forex Analytix. We're reinventing the wheel. Sign up for a chance to win a free $25,000 TFP assessment.
Last week I shared also this potential cup and handle inverted for the CHF. We have a nice retest of the lows, the previous support level. We have a bounce printing a new resistance, basically the 38% Fibonacci retracement right there at 82.17, acting as element of pressure to the downside, putting some resistance, and then a new lower low. We have support at 79.57. And the market keeps trading lower. So basically, I will expect more downside for the Swiss franc, and that's the expectation at this point, at least for now. Of course, the dollar versus the Japanese yen, we still inside what we may call a big range of consolidation after forming these monthly fractal support at 139.88. We have resistance at 148.65. So that's the major range. That's a 6.1% range for the dollar versus the Japanese yen. Let's go into a lower time frame. You can go into a 4 hours time frame chart. We can see the range for the market at this point between 144.94 and 143.75. So I admit both scenarios possible. So a break above the resistance may trigger, an approach or a retest of the highs. But on the other hand, if we see a break of the support, that will imply or favor a retest or an approach to the previous weekly fractal support at 142.10. In terms of patterns, there's the 113% Fibonacci extension converging with the weekly fractal support. If somehow the dollar keeps trading lower and pushing the dollar versus the Japanese yen to the downside, we will pay attention to this 142.15. That's where the bullish alt-bat pattern will complete. Wait for that pattern. That may offer a nice structure support to try to move into the upside with the dollar versus the Japanese. We have also the Canadian versus the Japanese yen. I see this as a potential heads and shoulders pattern formation. Let's see how the market unfolds. But at this point, it makes sense to pay attention to the daily fractal support 105.03. That's our reference point as a potential neckline, let's say the reference point for the validation of the inverted for the head and shoulders pattern formation. But as always, the neckline will only the pattern will only validate once we see a breakout of the support level. I admit this is a nice price zone to search for positioning to the upside. Okay, because this is a reversal price behavior. If the price breaks a support, we will see, a potential move to the downside, a significant move to the downside. Actually, you can already measure the potential move towards the 200% Fibonacci level. That points 104.36. Actually, not very significant, but it's enough to provide you an opportunity to, to try to. Actually, let me rephrase this. Let me go into a 1 hour time frame and let me adjust these levels again, and just to confirm on a lower scale, 103.96. that's let's say the default target for the edge and shoulders pattern formation for the Canadian dollar versus the Japanese yen. As I was saying, the neckline of edge and shoulders, until validated, it may favor. It may support positioning to the upside. Okay, so this is not a very this is not unusual to see. Once you identify a neckline, you wait for a breakout of the support. Sometimes it will not happen, and later when you look back to the charts, you will see these fractal support levels, this neckline, being used as, you know, as support for positioning to the upside. So don't ignore that possibility. Also, only pay attention to that specific pattern if the price breaks below the daily fractal support. If that happens, we may see the, you know, the pullback for the Canadian versus the Japanese yen. So just to confirm, neckline 105.03, that's where the edge and shoulders pattern may be validated if the price breaks below that level. So we have also the euro versus the pound. We have completed the bullish pattern before. Nice move to the upside. We are inside what we may call a daily fractals range between 85.08 as support and 85.75 as resistance. If the price breaks above the resistance level, we may see a squeeze to the upside, of course. That's what I'm expecting. At the same point, on the other hand, if you see a break below this daily fractal support level, we may see a deeper correction or a deeper move to the downside. Nothing more to report at this point. Euro versus the New Zealand, multiple scenarios possible at this point. Eventually a cup formation if the price retests 194.87, if the price goes comes to retest the previous fractal resistance or the previous highs. We need to wait because this may actually also work as a bearish flag pattern. So if somehow the price breaks below the intraday support at 92.61, I admit a deeper retracement towards the next Fibonacci level, which lies at the 50% Fibonacci level, 191.60, and converges with the weekly fractal resistance, the previous fractal from May, broken at 91.56. So that implies a breakout or a break below actually the fractal support may favor an attack or an approach to this previous resistance level for the euro versus the New Zealand. We already discussed the DXY. Let's jump into the dollar. Dollar struggling at the bottom of what we may call a descending channel or a parallel channel. We can see the metal starting to struggle to, you know, with this 32.46. We have also the daily fractal support now acting as element of resistance at 32.95. So that's basically the range between the previous broken support and the new fractal below. That's the range for the metal. Nothing else actually. We may see, let me see the crab pattern, probably the golden Fibonacci extension. Let me search for this Fibonacci. Few points below 31.96. Eventually, if gold breaks below this level of support, we may see a new lower low, eventually a crab pattern at 31.96, converging with the 61.8, actually the 161.8% Fibonacci extension level, and also with the 78.6% Fibonacci retracement level projected just a few points below at 31.91. So basically there's a bullish crab pattern projected below the support level. If gold approaches these levels, pay attention to that bullish pattern. On the other hand, we have also silver. I shared these also on Twitter with some of you for sure. This is what we may call an edge and shoulders pattern formation. We have a bearish butterfly completed at 36.29, 36.30. We have a neckline as we have a daily fractal support as a reference for the neckline at 35.26. If the price breaks below this support, I admit a move towards 34, 14. That's the default target for the head and shoulders pattern, and also just a few points above the 38% Fibonacci retracement level, which is the default target for the bearish butterfly pattern. So both metals may be pushed a few points lower, so pay attention also to that possibility. Crude oil, I also posted this potential or eventual bullish shark pattern at $63.57. We just need a new lower low on crude in order to complete this sequence. Let's wait and see. Golden Fibonacci extension converging with the 61.8 at $64.08. So we have what we may call a bullish shark pattern below support. So if the pattern confirms or forms, I will expect a bounce from the completion point. We have also Bitcoin. Let me decrease our, let's stay for now on a 4 hours time frame chart. We saw Bitcoin bouncing from the channel support or a potential channel support after printing a new fractal at 98,240. So we are approaching the highs again of this channel, of this parallel structure, this parallel channel, and eventually, let me try to use a parallel structure. It's not actually, let me use the trend line above covering the highs and the trend line covering the support level. So as you can see, this is what we may call an ascending wedge. Okay, I will not be surprised to see Bitcoin breaking above the range or the structure and then starting to pull back. We have a nice bearish alt-bat pattern completed at 107.59 and the market is struggling to print that retracement. So after the formation of the pattern, I'm expecting a drop on Bitcoin, at least back to 104.79. So I need to see a violation of this support level and the search for the 38% Fibonacci retracement level. The pattern that we are tracking, let me draw this for you. We have this last swing low and then the completion of the pattern at the 113% Fibonacci extension. So after completing the sequence or the pattern itself, you saw Bitcoin starting to trade sideways, moving sideways, and starts to unfold into this ascending wedge pattern formation. So wait for the violation of this structure, or to the upside or to the downside. As I said, I admit a violation to the upside, and then just to hunt all those stops positioned above, and then the market may start to retrace, or it will not need to print a new higher high, and it will break the support level, and it will start to retrace back to the Fibonacci levels. So that's all for today, and I hope to see you in the next video.